Hello, everyone, and welcome. Thank you so much for joining us for today's webinar, How to Set Up and Apply Company Commission Agreements in Applied Epic. My name is Lauren Roberts, Chief Agency Consultant, and I'm also joined today by my wonderful agency consultant, Laura Whaley. We are thrilled to have you all here, and we're looking forward to sharing today's content. Kite Technology is a managed IT service provider and agency consulting firm that works with independent insurance agencies and other businesses across the country. With over 30 years of experience and a team that knows the insurance industry firsthand, we help agencies get more from their technology and applied Epic systems. You'll see some of our key services listed here. If you'd like to learn more or want to set up a time to chat, just send us a message through the Q&A panel and we'll reach out after today's session. Let's do some quick introductions before we jump right in. Laura, I'm going to let you go first because I'm going to pick up after you and get this thing going.
All right. I'm Laura Whaley. I'm agency consultant here at Kite Tech, just over 3 years now. And I work with Lauren and the rest of my team, helping agencies optimize current Epic instances, as well as anyone that's going through migration from another agency management system into Epic. Go ahead, Lauren.
All right. Thanks so much, Laura. I'm so glad to have you here today. And so my name is Lauren Roberts, as I said earlier. I'm the Chief Agency Consultant over our agency consulting department. We have a wonderful team of agency consultants, both on the servicing side and on the accounting side, as well as some outsourced bookkeepers. I have been with the company since about 2016, I think. It's been so long now. Time flies. I mean, this year, I don't even know where 2025 went. I do work with agencies on both sides. Laura is specializing in our servicing, of course, but I do work a little bit on both sides of accounting and servicing. I also work with agencies that are optimizing, migrating, and I work with our business development team to come up with some cool new ideas for services that we can provide to you as well. So let's jump right on in. So today's agenda, we're going to go over a little bit about why you should configure company commission agreements. Very important. What are some of the types of commission agreements that are available? We'll talk about configuring agreements, not just based on your workflows and the carrier, but also per your accounting methods. Don't worry, you don't need to know all about accounting to be involved in this session today. We'll also talk a little bit about how company commission agreements being configured can affect your reporting. And of course, we want to talk about always how to increase user efficiency and make some better looking data in your system. So first, of course, we are going to talk about why. Why in the world should we configure company commission agreements? Because I know what you're thinking. Holy mackerel, these things are so complicated. There's so much information. I'll never ever get this done, right? I mean, that's what I thought when I first started doing it in my agency a long time ago. I was like, there's no way that we could possibly get all this stuff in. So we're going to talk a little bit more about some of your options, but some of the reasons to configure this so that it's going to work better for you is, users should just be able to click a box and pull some information in. The less your users have to do, the more likely you're going to be able to get them to actually enter that information in Epic. So if they don't have to think about it, they just need to check a box, great. So that's one of our goals in creating some of this information today. You also want to make sure that you turn on this cool little button in configuration. Not a button, it is actually got to be configured. There's some radio buttons involved. It's called Commission Premium Calculation, and that is in your policy configuration. When you turn that on, it's going to calculate your estimated commission as long as you have a percentage at the line level. So I am going to jump over into Epic real quick because we wanted to show you this firsthand instead of grabbing screenshots for this today. So let's take a look at where that is at. All right, here we go. So we're going to go over to configure, drop over into the policy section. We're going to take a look at both the policy and at an actual policy to see how this is going to work. So here you'll go to policy and it is called commission premium calculation. Now you do have a couple of options here. Not really a wrong way to select either auto run after download, or you can schedule it to run at the same time every day. What we don't want is do not run, because why wouldn't we take advantage of Epic doing something for us, right? But you have to know how it runs in order to take advantage of that. This is some pretty standard configuration here. This is typically how it comes out of the box: system date minus 0 days for your expiration date. And you definitely want to calculate any line that has an estimated premium greater than $0. So this is a good configuration. Again, auto runner schedule it. Cool thing about scheduling is you know when it's going to update. So you know when that calculation has happened. So you know if you have any troubleshooting, you know that it's going to either it didn't happen last night or it did. So just keep that in mind. So we're going to go over to a client then and pull up a policy. Yes, Tootsie's Orchid Lounge. My daughter actually went to Nashville this week, and I said you should go check out Tootsie's. It's historic. You got to see it. It's cool. Little Nashville, info for you there. Even though that's not where we're going next year for Applied Net, don't forget. So once we jump into the policy here, we're going to double click on the line level, okay? So once we get into servicing billing, we're going to go to line. Now, a lot of times I see agencies require the premium and commission at the policy level. Having it just required at the policy level is actually going to limit some of the data that you're going to have. If you start by putting that information at the line level, then it's not only going to be there, but it is also going to roll up to the policy level with that commission premium calculation. So the goal here is to have a couple of data fields completed so that that calculation does what it's supposed to do, again, either after download or whenever you have that scheduled to run. So having a commission agreement here gives you the ability to just check that box, have that information pull in. It's going to put that percentage in there for you. Now, you'll see here, I left this blank. We don't have any estimated commission on this policy right now. You don't have to fill out each line level. Download will fill out each line level for you if a carrier sends it over that way. And if you have it configured that way, an interface. But you really just need it at the first line level so that, again, any line with that with more than $0 in premium is going to calculate that commission. It's going to say 15% times whatever that dollar amount is. And you don't have to fill out anything else, right? So it's going to calculate it, drop it right in here, and then it's going to roll it up to the policy level. So you only have to do 2 steps here, right? So how much easier could it get? Now, not saying that you don't have to break the premium down at the line level. Nothing wrong with doing that either. But again, if we want to increase some efficiency for our users, it's not absolutely necessary. And you also want to remember to update your estimated premium here at the line level as you are doing endorsements and things like that. So we'll move on from that. So that kind of explains these configurations that you want to do to increase that efficiency for your users. So let's jump back over to our presentation. Oh, one other thing that I meant to mention there. Another thing that you can do is you can require the agency commission percent field. You can't require the checkbox. There is also not a default for the checkbox. I apologize. I wish there was, but there's not. That's one question I feel like I get asked at least weekly. Can we just default it somewhere in Epic to just check that checkbox, right? That'd be great. No, but you can actually get a script run to get that checkbox across the board. So, but make sure you finish this process first. That's at the end of the slides.
I'll add,
So,
I'll add in here though, just be mindful if you have a lot of benefits or surety business that's not using a percent for your commission. So if you're
mhm.
getting paid a flat amount or a rate per a tier, you may not want to require the percent field because it may not always apply. So just take that into consideration.
Absolutely. Yes. Very good point. Thank you, Laura.
You're welcome.
All right. So why don't, before we move on, Laura, do you want to go over some of these questions that we have? Let's take a look at Beverly's question. What happens when the carrier includes the fees in what downloads? Yeah, go ahead, Laura. So she
All right.
says if you're keeping track of just premium and what percentage commission you get on the premium, this would need to be manually changed. Yes, but it's also going to be overridden again by download. So you would have to basically turn that off right at the for that carrier to not download that premium if you don't want to overinflate that premium coming in from that carrier. Good question. Anything to add?
Nope, you covered it.
Sweet. All right. Lynn, thank you, Lynn. So you do not recommend entering all of the commission levels for each carrier and policy type PNC. That's a great question, Lynn. We are going to get to that in just a few slides here. All right. And then Debbie has a wonderful question. So the account manager needs to update the estimated if there are endorsements. Yes, that is our recommendation. I do not recommend putting in an exorbitant amount of thought in that and trying to annualize it out. Remember, we are talking about estimated premium and commission. It's not going to be perfect every time. I know you would think that somebody in accounting would have an OCD enough that would need to happen and need to have it exact. But again, that's what I encourage users to understand. Agency owners, operations, it is an estimate. So we do not have to have that exact. Your estimate's going to be used for reports and things that we'll talk about a little bit later as well. Remember, your financials are going to be driven by your transactions. So, you're still going to have that accurate end of the year total at the end of the day. All right, great questions. Thanks, guys, for engaging today. So let's go ahead and move on. Oh, Laura, we have one more question. PEPMs.
I need a little more context.
All right,
That
Susan.
is an acronym I'm not sure on that one. So if you could let me know,
I've
Susan,
heard it
what
before. Susan, if you want to expand on your question a little bit, that would be great. But we will go ahead and move on and we'll jump back to that one, okay? All right, very good. So we did grab a screenshot here. I like to go through Epic, of course, and show you guys a little bit more about that and how that works. When you do require, remember when you're requiring, you can select the certain types of business like Laura was saying earlier. All right, very good. So what this is going to do is this is going to give you some better data that's generated out of your system. So all too often, I have agencies come to me and say, why can't I get numbers on my book of business? Why do I have all of these blanks, all of these holes? Well, it's because the data is not getting entered, right? So if we make it more efficient, we configure some things in the background, instruct our users, put those bumpers around it with the required fields, then what we're going to get is a lot better data on things like your book of business reports. You've got retention reports. Those are going to have estimated premium and commission. Things like your lost business, new business reports, all of these different areas are what we're going to, increase the data as well as, eliminate that garbage in, garbage out in the system. I did mention also once you have configured your commission agreements. We'll talk about the how in just a few minutes. But once you have configured, you have instructed everybody on how to do everything, you can actually request a script from Applied as long as you have more than like 700 policies, right? I think that's the threshold. Could have changed. But as long as you have established all of that, you can have them go and script to check that box across the board. Otherwise, your users are going to have to check that box each time they renew the policy and then have that commission agreement pull in. All right, very good. So let's move on. It's also a little bit more efficient for renewals, right? So if you have created a commission agreement, then that obviously is going to save your users some time because they don't have to stop and think, what is the percentage of commission? Now, brokers and agency bill type items, you may want to not put all of the commission agreements in because we want that user to look at that invoice because that invoice is going to have that percentage on there for them. And of course, your Epic can automatically select the renewal commission agreement if you have commission agreement set up between new and renewal. But again, you must select that checkbox to make that happen. All right. We are going to move on into let's talk a little bit about if your agency is on accrual. Now, so far, we're talking about making this super duper simple, right? So if you're on a direct bill cash accounting method, so what that means is, your agency does not recognize income for direct bill transactions till they actually get the money and put those commission statements in the system. If you're on that cash basis, you are recording the exact percentage coming from the carrier in those transactions, and that's what's pulling into your billed premium and commission. So one of the options that you have is to not complicate and simplify your commission agreement so that you have some averages, right? Again, I said estimated premium and commission. Don't freak out, I promise. It's not that scary. So I'm just cracking myself up today. I got no emojis going on. You guys aren't laughing. What's going on? Thanks, Laura. She's laughing. All right, so so when we're talking about this, you can set a default so that again, all your user has to do is check a box. They don't have to think about it. They don't have to use the drop down. We're not looking at, is this home no auto? Is this auto with useful drivers? Is this work comp with, this premium or with this premium? We're not looking at all of that different detail because you do have to build those out if you're on an accrual basis, but on a direct bill cash basis, you don't have to do that. You can take just an average. Your user doesn't have to think about it. They check the box. It should pull in based on very little criteria, right? So you've got things like new or renewal. You could do an average with a carrier for new and renewal, or you could do an average for commercial and personal. Heck, if you want to get fancy, you could do new personal, new commercial, new, renewal commercial and renewal personal. So you have a couple of options there, but the more criteria there is in that commission agreement, the less likely it is that the user is going to be able to just check a box and it pulls right in. So you just want to be really cautious about how you are configuring those if you're on that cash basis and if you're okay with that average and not creating all of those detailed agreements. Now, you don't have a choice, unfortunately, if you're on accrual for accounting or if your agency is reconciling direct bill commission. We do have some agencies that are reconciling, which is the workflow for an accrual basis. That's essentially, we have to enter all of those transactions at the policy level at binding, right? So as soon as the policy is bound, as soon as an endorsement is bound, as soon as an audit is done, all of those pieces, whether direct bill or agency bill, have to be put in immediately. I know it sounds like a nightmare, right? I don't like accrual at all. But some agencies have to do it. So of course we want to include you in this conversation. If you are on that accrual basis, you do need to create all of your commission agreements. Descriptions are your best friend because you do not have a whole lot of criteria in these commission agreements. You'll see that in just a second when we get a little bit further along. So you have to have good descriptions, have to make sure your users are diligent and understand they've got to use that drop down box, right? Because that transaction that is going to go in is pulling from that policy. So when it comes to detailing all of that information out, I think we had one person earlier ask about, do we have to put the commission at each line level? I mean, yeah, you're going to have to. And if you're in that accrual mode in your system and you're entering transactions for everything at the policy level at binding, yeah, you're gonna have to do a whole lot more work when it comes to your commission agreements. And you also want to absolutely maintain those agreements, right? Because if not, your accounting department is just gonna probably mutiny, I would say, because there's gonna be so much cleanup that has to be done. And so anytime you're going to have to create those detailed agreements, or if you choose to create those detailed agreements, again, all options here. Kimberly says, how easy is it to maintain? It's challenge, and you'll see that when we get into the commission agreements themselves, because once they've been used, they don't go away. So, all right, let's keep going. Laura, I think it's your turn. I think they got tired of talking to me. Still didn't get any emojis, but it's okay. Eleni, are the reactions broken or something? Like, are we? I'm just kidding. All right, Laura, let's get into types of commission agreements.
All right. So types of commission agreements, we're going to cover, remember, this is company commission agreements, not PRBR commission agreements. There's a little variation there. Our next webinar is PRBR. So if that's what you're looking for, make sure to dial in for our next one. But for company commission agreements, we have four. We have our standard agreement, which is your percent based, and that is going to be the most commonly one used. We have a couple of other options though. So we have date based, premium based, and risk based. So we're going to go through the differences in these here in just a minute. But as Lauren mentioned earlier, remember that once an agreement has been put on a policy, you cannot delete it. So, and being thoughtful of maintaining these suckers, make sure that, what you get put in the system is something that you really want to get used, and it's going to be something that's easy to maintain. So the more complex you build these out, the harder it is going to be to maintain, because now you have to go through, you know, if you enter 25 commission agreements for a carrier for personal lines, you're going to have to maintain 25. So just keep that in mind. The more simple you make it, the easier it's going to be. All right. Uh,
Laura, before you move on,
yeah.
should we pause and answer a couple of those questions that were hanging out there that you would like to answer live?
Well, we have Beverly asked, what box did you check under the calculation when setting up the commission agreement? And
Oh,
I'm,
let me grab that for you. Hold on one second.
yeah.
And here, right in this little spot here. So use commission agreement. And don't forget, if you have multiple lines on the policy and you're not going to configure by line, because again, I believe someone asked earlier, what if there, and I know there are policies with different commission at different line levels. Carriers can't make it easy for us, right? So if you are applying the same commission to all lines, just make sure you hit that little hyperlink there once you have checked your box as well. Great question. All right. The question from Debbie. Oh, let me jump over into configure. Laura, you want to read that one real quick for us?
Debbie's question is, will you show us what to uncheck the box for the premiums to be downloaded, which duplicates the estimated premium?
Hopefully. Yes. Haha. It was lagging there. I was worried a little bit. Okay, so to not download or update the premium, you would uncheck the personal and commercial or either or box right here. And that will turn that off for you. Okay, good question. All right, Lynn, very good question. If we are downloading direct bill commissions and not reconciling, then why is this important? That is an awesome question. So again, remember your direct bill commissions are the transactions that are coming into your system to reflect the earned income for your agency. So that's all on the financial and the accounting side of things. What we're looking at today is again that estimated premium and commission, which is something that you have to either manually enter and update, or again, enter those couple of fields, the checkbox, your estimated premium, and then let it calculate from there. So download will definitely, and I got to answer Beverly's question too. So download will update that estimated premium for you, but it doesn't touch the commission on the policy. So if you go to run a book of business report, lost business, new business, any of those reports that are out there with that field on it, you're not going to get any data in those. You're only going to be able to pull in your billed premium and commission. So, think about if your policy is on an installment schedule, you're only going to be seeing a portion of that premium until the end of the policy term. So anytime that is, during the policy term, you're not going to see what that annual premium would be estimated at. So this really is the goal, to get this to generate for estimated premium and commission. Because download is just going to put exactly in what you're receiving from the carrier. So very good question. Okay, Beverly says, under configure, I'm going to hope that the question is related to policy and the commission premium calculation. And that is right here. So policy under configure, and then commission premium calculation is where we would get that turned on. Laura, is that what you were getting to? Okay, good. Hope we got you, Beverly. All right, fantastic. So we will jump back over. Thank you, Laura. And we are going to go into those types of commission agreements. So I'll let you take over and let me know when you are ready for me to navigate over to Epic.
Right. So again, we've got the first one, which is the most common, which is your standard. If you are on cash basis for direct bill commission, you can use that agreement. And remember, an average is okay. So you always want to manage for that norm. Personalized, I think, is probably the most convoluted. But like to Lauren's point, if you have a youthful driver or high risk driver, you might get paid one commission versus a standard auto policy. If most of your business with that carrier is a standard auto policy, um, don't worry about putting in both agreements. Go ahead and do your standard and know that when you're looking at your estimated book of business for that carrier, you're going to be off maybe, a percent or two. But when we're talking about law of averages, it's really going to be a small amount overall. Make sure that you're referring to your production reports to help decide on those average commission percentages. So again, you guys are getting those production reports. You can run those production reports. You can look at your commission agreements that your carriers are paying, and pretty quickly you can look through that and see what your average is going to be. Again, we're talking estimated. We can't stress that enough that this is estimated. So again, that margin of error is going to be allowable. It is okay. You don't have to be to the penny. We get a lot of people, they get hung up on being exact, and it truly is an estimated field. And again, just try to keep the criteria to a minimum. So the goal would be within your commission agreements, when you're creating those commission agreements, using enough criteria where the commission agreement will default, but not so much criteria that now we have to create duplicate or multiple options. So Lauren's got a couple up here. We've got one for new business. And you can see here that we've left our criteria as far as our agency and our branch, our line of business. All of that is open, issuing location. Where we've decided to use criteria in this agreement, though, is our line status. Because it is new business, we want to make sure that we're using our new business policy statuses. So anytime those policy statuses, our line statuses are in effect, Epic is going to look back, find this commission agreement, and pull in that 20%. Certainly, if you've built out and you've got lines of business and you've accounted for all lines of business, then this will still work. But if we have lines of business for only part of our book, then Epic is not going to know what to do for the other half of the book. So that's where we want to make sure that we're being as concise as possible, but not creating too many options. We've done the same thing on this carrier with renewal. So if we have renewal line statuses or policy statuses in effect, it's going to pull that renewal commission. So what would happen if we have renewal, let's say renewal standard business, and then renewal for high net worth? Standard and high net worth is not a criteria that you have here in your agreement. So Epic cannot make that determination on its own. And what's going to happen, even if your user checks that checkbox to use the agreement, it's going to look back to the file and say, I'm not sure which one to use. We have two that could be used here. And that's where that drop down is going to come into play. So it's going to require your user to drop down and then make a decision rather than Epic just working for you.
Mm-hmm. One thing I also want to add here on the line status is you want to make sure that you include any quoting or marketing statuses if your agency is using those as well. Because if you are adding a policy in and you're requiring this information, you also want to be able to check that box and pull it in for those statuses as well. So again, make sure you're covering all your bases when you're doing those requirements. Now, another thing that I want to add on here is we are very limited on criteria, right? So we can build this out a little bit, but you are pretty limited on the type of criteria that you've got there. So that's where I was saying earlier, make sure you pull in good descriptions if you are going to create these detailed agreements that are actually the actual commission that you're going to need to pull in. So, if you've got that home no auto or, like Laura said, private client and standard, any of that additional detail, you're going to have to make sure that the description is really good and the user understands to use that drop down. Also, so once this is used on the policy, like Laura said, it's here. So you do have to expire this agreement. So one of our folks earlier mentioned or said, how hard is it to maintain? You can't change this, right? It's once you've got it applied to a policy, you cannot change this agreement. So you would have to expire that agreement and then add a new agreement. So you're going to have to be really good with things like your naming conventions for those expired ones, to keep everything in order. Make sure we're really paying attention to those expiration dates as well. So this is where we were saying it is a lot to maintain because you can't remove them once somebody's pulled it into to the drop down and left it on the policy. All right. Quick question from Kimberly. Good question. If I'm following, can I not use the transactions based report to get the billed commissions? Yes, absolutely, you can. And you can get that on a book of business report as well. Her question is, what is the advantage of the book of business over the transaction report? So, like I was saying earlier, we're looking at estimated premium and commission, which ideally would be your annualized premium and commission. So, if you're looking at a lost business report, even a new business report, if you're not entering those transactions for direct bill upon binding, when you look at a new business report for last month, you're not going to have any transactions because direct bill commission typically is going to be 45 to 60 days after that policy has been bound and issued. Could be later for those folks that late pay, right? So in that situation, you're not able to get that data from those reports because it's just not even there. So again, unless you're on accrual or reconciling and entering those transactions upon binding. So good question. All right, so let's go on to our next one and then we'll jump back over to some questions there. Ready, Laura? All right.
Right. So the next one we have is date-based commission agreements. These are typically used, we find them when we have multi-year policies. So if a carrier is going to pay you more for year one and less for years 2 and 3, for example, you would use a date-based commission agreement. You can define date ranges with either years or months to set these up. And then your commissions can be a flat fee or percent for each of those date ranges. So remember, if you're being paid differently on a multi-year policy or even a short-term policy, you could use a date-based commission agreement. All right, so from our date-based commission agreement, we're going to get into the next two are more found, I would say, in workers' comp and or benefits. But we have our risk-based and our premium-based. So first one is going to be your.
Did you want me to go into the date based?
Sure, go ahead. Yes.
Okay. So sorry. Let me go
No,
check that
good.
box. I didn't create a test one of that. I apologize. Date based. It's a good thing nobody uses this data. They'll be like, why do we have that agreement? So you'll notice here it doesn't give you any options for adding the percentage in. Once you choose that and you give it a description and your effective expiration dates, you're going to click on detail. And then this is where you would be able to build that out. So, so this could also be great for like a life policy, right? So if you're not going to change the policy status for whatever reason, if you're just going to put in like a 20-year policy and you only get commission for the first year, you're not going to get it for the second, third, fourth, fifth, et cetera, et cetera. That's a good option. Laura, I know, it's like Cincinnati policies have like the 3-year policies and so forth. So if there's a variation in that commission, this is where you can configure that out. All right, cool.
Yeah.
I will let you back.
So we have the premium-based commission agreement. These aren't as commonly used. Again, I'm finding these more for workers' comp than anything. But workers' comp would be a good example where you might get paid a certain amount for the first X amount, and then beyond that, you would get, a different commission or commission based on premium. So let's say first $5,000 of premium, you get 10%, And then as that premium goes up, maybe they pay you more commission. So you can enter these premium based commission agreements two different ways. You can base it on a individual policy or a policy's book of business. Again, usually that individual policy is the one that we're going to see most often. So the carrier is going to pay you, again, X amount for that first layer of premium, and then they would tier it up from there. All right. So beyond our premium based, if you jump into Epic, here we've got our premium based, and you can see here we've set this up. There's individual policy, and we're getting 0% for all policies. But certainly we could add to this and say from 0 to 5,000, we would get X%. And then we could go another level and say if the premium is 5 to 10,000, then we get, maybe another 2% commission. So obviously getting that advantage of seeing additional premium or additional commission as our premium goes up.
Another thing to note here is your last tier always has to have an open. So that's like your max. So just keep that in mind. And you'll see that on the next one as well. All right, let's go back. There we go. All right.
Lauren hopping all over the place.
Nice.
All right, so now we have our risk-based commission agreements, and these are primarily for benefits. So benefits, a lot of times you're going to see total eligible risks or insured risks, the number of insured risks, so typically lives in the benefit world. And so you may get paid differently based on the number of lives. So again, smaller groups, you may get less commission, but as those group numbers rise, they're going to give you a little bit more commission. So in our commission agreement, we have our risk-based, and we've got risk-based tiered, and you can see we've left the general criteria there pretty open, but where we're focused in now is on the policy level for the risks insured. You can see Lauren has entered minimum, which would be 0, well, I guess technically one life to 100 lives, we're getting 15%. And then from 101 to 300, we're going to get 20%. And then from 301 open, because we do need it to be open, we're going to get 30%. So this will automatically calculate based on that benefit screen that you have in the background on your benefit policies, where you have those fields, either again, risks insured or total eligible. So as long as that data is being entered and we have that commission agreement box checked, it will verify back to that data field and decide which commission agreement should be picked.
All right.
All right, so I'm going to turn it back over to Lauren. She's going to actually look at configuring these based on your accounting methods.
Yes. So I'm going to pause for questions for just a second. I wanted to point something out. That's why I grabbed my browser over there. So Brian has a question related to adding in cancellation statuses. He said, so would you recommend that for line status, you leave it at all if you're not differentiating between new and renewal? Otherwise, if your cancellation status are not included, I'm guessing your reports would not be accurate. Good question. So yes, if you're not going to differentiate, absolutely, you could leave that at all. No problem there. But one thing I do want you to note is that I changed the policy status here and it did not change my agreement. So, funny way that this thing works, right? Sometimes we don't know what the logic is, but it's okay. So here, when you change the status, it's going to maintain that agreement, just like it would maintain a producer commission agreement, which we're going to do a webinar for next month. And so that's one thing to keep in mind here. If you cancel the policy, it's going to maintain whatever that commission agreement was if the policy was new or renewal. So when you check the box is when it's going to pull that criteria in. So like if I uncheck the box and check the box again, probably not going to get any commission agreements because I don't have any configured with a canceled and insured request policy status. All right, very
And
good.
so while you're on the screen, we can answer Beverly's question here. So Beverly just wanted to clarify. We made the comment that once an agreement is in play, you can't delete it. You have to inactivate it. So she's asking, she's wanting to clarify if it's changed from new business to renewal, you wouldn't be able to delete it. Where we were saying you won't be able to delete it, let's say, let's take this policy for an example. We've got the reoccurring contract, it's 15%. Let's say that I entered that. I thought it was 15%. Lauren gets the commission statement and she's like, no, you bozo, it's not 15, it's actually 10. I cannot go into Epic because it's already been used on a policy and update that to 10%. I have to inactivate it, add a new one for 10%, and then we have to fix the ones that are in there. What Epic is going to know to do intuitively, if we've got our policy statuses built in and we have one for new and we have one for renewal, when this policy renews, let's say we have it in as new business and it renews, our policy status updates, and Epic now looks back to the commission agreements and says, okay, now we're not with new business, we're on renewal. So I'm going to pick from that drop down that renewal commission agreement, and that's the one that's going to be in play. So once they're on a policy, that's where we can't just delete them. We have to inactivate them and add a new one. So hopefully, Beverly, that answered your question.
All right. Paige, I believe our lovely ladies in the background, Miss Eleni, has dropped the link to the webinar in our chat. So check out the chat in the Zoom and it will show you that link there. Okay. We can't wait to see you there again. And then Kimberly, I'm not sure I understand your statement. So if you will, please clarify for us. All right. And then it looks like Tracy has a question. Can you do commission agreements? Oh, did you already answer that one,
Based
Laura?
on head count, and that's what we just covered was that risk base. So it's
Perfect.
the either eligible risks or total risks. And so it would be a number per head. Does
Thank
not
you.
have to be a percent. It can be a dollar amount or a percent.
She's faster than me. She read ahead. And then also, if there are multiple renewal commission, which will it choose?
Well, it may pick the first, but most likely it'll say, I'm not sure. You need to validate what's here. So that's where we're saying try to avoid having multiple options there, so that it has just one to pick from and it can automatically do that for you.
Again, unless you're on accrual. So I know I kind of jumped ahead earlier and I talked about this already, but that's fine because we only have 15 minutes left. Um, so just as a reminder, if your agency is on an accrual accounting method, again, that means that every time a policy is bound, whether it's direct bill or agency bill, a transaction has to be entered for the full premium of that policy. And then accounting in the background is going to chip away at that and reconcile it as they receive money for that specific commission transaction. So just make sure that you keep that in mind. You've got to have really good agreements set up for accrual, and your users are going to have to pay very, very close attention to this. You're going to absolutely want to make sure that you are regularly auditing your commission agreements. You're also going to make sure that you are running reports that we're going to talk about in just a little bit, to see if we're putting the right commission agreements on policies. Because again, if we're not choosing the right commission agreement, or if we are not getting those agreements updated, those transactions are going to be wrong. There's going to be a lot of adjustments that have to be done on the back end in the general ledger. Your accounting team is, going to need like 12 more people so they can correct the mistakes. So we definitely want to make sure that if you are going to configure these out, that you're on this required basis, you keep an eye on that. Now, again, not saying that you can't choose to detail out your commission agreements. If you want to do that, no problem with that at all. Just keep in mind, it's not going to affect your billed transactions for direct bill if you're on that cash basis. You will have most likely a little bit more accurate estimated premium and commission because you'll be updating that. But again, you're going to have to ensure that your users are paying attention. They know that they have to use the drop down box. And you also are going to need to make sure that you maintain those commission agreements as well. So, again, like I said, no harm in wanting super duper accurate data. I commend you. But if you want to, create better data in your system, think about maybe I have no information at all in my estimated commission right now, right? I just need some numbers in there. I need to make this better for my agency, get some better detail out of my reports. That is the default is one of those options to just keep that average in there. All right. And I just wanted to make a note here. I know I said it earlier, but I have to reiterate, you may not want to configure commission agreements for your agency bill stuff or for your brokers because that information has to be correct. Again, in order for that agency bill transaction to be correct, because your transaction that you enter in is pulling from your policy. So if you pull the wrong commission agreement in, or maybe a user just clicks that default and doesn't have to think about what that commission is, they might be pulling in the wrong information. So I typically recommend when it's agency bill, look at the invoice. You're going to get that information every time. So definitely would be my recommendation. But again, no harm in configuring those as long as you're staying on top of the fact that that needs to be updated regularly. You got to audit to make sure we're pulling in the right commission agreements and so forth. All right. Laura, do you want me to pause for questions or keep going?
Go ahead. I think I'm
All
answered.
right, she's going to type away at your questions there. Um, so we wanted to talk a little bit more about how this detail is going to affect your reports. So I've mentioned it a couple of times, but when it comes to your estimated premium and commission not being on your reports or not being filled out completely, you're losing a lot of information. Think about how do I know how much business I have with Travelers or how much business I have with Progressive. And my marketing rep is coming by saying, you don't have what you have, what you not have. If you don't have that data in your system, you got nothing, you got no backup, right? That's your data. And so you want to make sure that you keep it accurate and updated. Epic is your one source of truth for your agency. So, we want to make sure that that information is there. So you are able to provide that detail and that information. Again, this is from an estimated, type annual information. So keep that in mind. So it's not going to be 100% accurate. Travelers might say, well, you've got $10,000 worth of revenue with us and you're at like 12,000 on your report. It's not going to be entirely accurate. Again, the goal is to be able to see that estimate of that premium and commission. Oh, one thing actually earlier I did not dig into but just crossed my mind because someone asked that question about download is that estimated premium should only be estimated premium, not premium and fees. So what's actually being billed is going to be in that billed premium and commission. So if you need to know what your client got billed for the entire term before you go to do your renewal and do a comparison there, that's what you're going to refer to. We don't want to overinflate your premium or sorry, your commission by including those fees because remember that calculation is pulling that estimated premium that you enter and multiplying it by the agency commission percent at the line level. Some of the other reports that you're going to see this information on are going to be things like your retention report, lost business, new business. Again, if you run a lost business report and let's say a policy canceled midterm, your billed premium and commission is not going to show that full amount, right? Because they've only been halfway through the term and they're on installments. So that's another thing to kind of keep in mind there. And the billed premium could go down because they get a credit back. So again, that's where these data fields are beneficial versus using the billed premium and commission. Definitely places to use billed premium and commission. But in this case, when you're looking at annual type numbers, that's what we're referring to. Laura would like to answer this question live.
It's a you question.
Oh, it's a me question. Hi,
Uh,
Deb.
It is an accounting question, and that's why I gave it to Lauren. But Debbie wants to know, she says she's the accounting manager and they have to enter the commission agreements on the company level, but the account manager is choosing the agreement on the policy level. They are on accrual. And when they reconcile the commission agreements, will this be fixed if the account manager chooses the wrong agreement?
That's a loaded question that involves a lot of end user error, sounds like. If they're so if I'm understanding correctly, like let's say for example, let me drop over into a policy real quick. I apologize, guys. We do have a couple more slides, so hang in there with us. If you have to go, remember this is recorded. I know I always talk too long. My apologies. So let's jump into Tootsie's real quick, but we also had a lot of really good questions today. Um, so there isn't actually an option to configure or to select a commission agreement at the policy level because remember, I'm going to use the package again. Um, and at the policy level, you have very little information, right? So there is no commission percent. That's not even a data field here. So it has to be selected at the line level. One thing that I would think is probably affecting this is they're probably checking the box and then doing an apply to all lines. That would cover the entire policy. No, nothing is going to be fixed. When you're reconciling those commission statements, you're going to have to manually adjust that because that commission percent is already on that transaction that has been entered in. So that's where you've got manual adjustments that are going to have to be done. If you go the whole policy term, you realize that the percentage was wrong, you might have to just do a write-off. So it does, it is going to create a lot of work if that's not corrected. So my recommendation would be when you are reconciling, if you find an error, get you a little $ fix your stuff activity, right? I call it fix your stuff. You call it whatever you want, but send that activity over to the account manager and say, hey, you need to go update this on the policy. So if there's more endorsements, audits, installments, whatever the case is, they need to go fix that at the policy level. So next time a transaction is generated, or entered, it's going to pull from the right agreement. Okay. Very good question. So, Laura, back to you.
Okay. So, obviously, one of the bigger reasons to use these is for data integrity. So, how do you audit? What reports do you use to make sure that your data is in good condition? And so, we've pulled out a few that we commonly like to look at. Um, the first three are going to be under your policy reports. And for those of you that, for some reason, still do not have the most recent report pack, it came out in 2022. So if you're sleeping over there and you need to get with Applied, just start a chat with them. They can log in and take care of this pretty quickly for you. So if you don't see these in your reports, get with Applied. But the first one is a policies with zero agency commission. So it will look back to that line level and see where you are missing commission. Criteria on that is you're looking for blank or zero. Obviously, if you do have policies that you're getting zero, you need to be able to know that and identify that, but this will show you where you're missing something. The next two are very similar: policies with no estimated premium and policies with no estimated commission. So it's looking at that policy level, the data fields there for estimated commission and estimated premium. Again, if you have that calculation on, as long as you have estimated premium at your line level and you have your agency commission, these fields should be calculating. So if you're missing something there, it's either they're missing it at the line level or you don't have your calculator on. The next two, yep, go
I'm
ahead.
sorry, Laura, can I interrupt you real
Yeah.
quick? One thing to note on that is, like Laura said, the field should be complete if you've got that turned on. But really, you don't have to run the premium one if you do have it turned on, because if there's no premium, it's not going to calculate a commission either. So you can keep, like, that's just a little tip there. You may want to run these initially, both, but you don't have to run both once you've got that set up. Brian has a good question. Laura, do you mind if I jump over into Epic real quick?
Go right ahead.
Cool. All right. So, oh, I have not opened reports yet. Brian's question is, where did you say these reports are located? I will navigate to Epic and grab it for you. So over in your main report section, don't forget to make a copy and send it over to your My Reports before you edit any of the criteria or the layout. There are actually two different ones for the policies with 0 agency% commission. So you can run this based on the agency bill or direct bill. The reports with the little asterisk on them are the newer reports. Never ever revert to default settings on those because those are custom layouts. I feel like we say these things like in every meeting. In
Super
every
important though,
webinar.
because there's always somebody that does that, and then they're
I
like,
hope there's
oh,
just one person out there that's like, what? Um, so here is your policies with 0 estimated commission and with the 0 estimated premium. Now, one of these reports is actually an older report, and that is the Verify Policy Commission's premium payable agreements. That is also a policy report. Yes, there's one for PRBR too, but we're not talking about that one today. So here you will see the verify premium payable agreement. So if you are looking at, a specific carrier, policy status, whatever the case is, if you want to find out if people are actually pulling in the premium payable agreement or if they're just putting a percent on the policy, that's a report to run. I also, when you run that report, yes, I have run it from here. It does not have the policy. Why am I losing words today? Policy effective and expiration date. So you will need to add your policy effective and expiration date in there. So you want to bring that bit of criteria in, as well as most likely your line status to look at active policies. So you can certainly add that criteria in there, easy peasy, and then you can just modify that report based on that information. Then the last report here is called, it's a transaction report. And this one is going to be very similar to the one that's looking at the policy. In this case, it's looking at transactions that have been entered. So, if you want to review this on a regular basis, you're looking back at transactions that have been entered. So I cannot remember the wonderful person's name earlier that asked that question, but if you're trying to see if incorrect premium payable agreements are on transactions before you go to reconcile and go through the heartache and pain of adjusting and writing things off, you could run this report before you even reconcile. And then you can kind of, address any of those issues, make sure that you go reverse a transaction and get it put back in the right way. So that is a great report to use in addition to your regular auditing of the policies and the agreements. All right. I am going to, I promise I'm in a hurry. We're almost done. I saw the next step slide. I was like, yes, we're almost there. Okay. So the last piece here is, a lot of folks ask me, well, how do I know if I'm getting the commission that I'm supposed to be getting? If you are doing the averages, you are not going to be able to see that, right? Because we're going to get that commission from the carrier. It's going to give you, yes, I'm going to go back to the last screen for the person that asked the question. So if you, sorry, Beverly. So if you are um, putting in a default that's an average commission, that's just for your book of business reports. You're not going to want to compare that policy percentage to what you're actually getting paid from the carrier, right? Because it's not going to be accurate. We're going from an average to versus the accurate, right? However, if you are in fact set up on all of the agreements that are exact, there are some cool reports out there that you can use to compare what did you actually get paid versus what came in on the transaction. My recommendation is do a periodic audit. If you're going to go with the averages, like we're kind of recommending for efficiency, do a regular audit. You can pull a production report, earned commission report, whichever one you prefer. For let's say the last 3 months, if you want to do it quarterly or biannually, by carrier, and look at the commission percentages that you're getting compared to your actual company commission agreement, right? Whatever came directly from travelers. Take a look at those every once in a while. Another thing you can do is you can go through that book of business report and compare your billed and estimated premium at policies that maybe have expired over the last couple of months. And did we get paid some wildly different amount or underpaid? Or did we even get paid, right? Don't forget, you've got policies with no transactions reports too. I can't even get into that one right now, though. We will be here all day. And I promised I would try to end around 3, or 1 or 2 or wherever you're at. So just keep that in mind. Do a regular audit to, if you're feeling like you're not truly comfortable with this default commission percent that's pulling in, you want to have something to compare. Definitely, make sure that you're regularly auditing that information. All right. Lauren, yes. Debbie has a question, I think. Beverly also has a good question. I'm not sure if we can get a printout of all the questions. I'm going to defer to our lovely marketing gal that's hanging out in the background, and I'm sure she will be happy to let you know if we can get that for you. Okay, great question. See, you just star of the show, Beverly. Good job. That's a very good question. I haven't had anybody ask that before. All right, cool. So let's talk next steps, right? We've provided a ton of information today, as usual. What should we do next? So you want to decide on whether to do the average or the accurate agreements, set out the pros and cons. I think we've kind of gone over most of them today to give you some good prep and background to get this started. Then, of course, identify what those averages should be. You can pull that from your commission agreement from the carrier directly, or you can just take a look at some production reports, see what that average is, drop it into Excel. Oh, don't forget on that, those 2 verify reports, when you're verifying the premium payable agreements, I do recommend running those in Excel. That just hit me as I was thinking, where could we figure out the average? Because you can kind of sort and filter and see which ones are missing what agreements. So those are great reports to run in Excel. So if you're doing things accurately for accrual, get your agreements together, find out what's current, and make sure that you attach those in Epic, because Epic is your one source of truth. Do make sure that you go in and require those fields after you have configured these commission agreements, right? Don't do it right now because there's nothing that's going to fill into the box. So we don't want to drive people crazy. But now, if it's going to take you a little time to get them in and you want to start getting better data, you can require those fields. And as an alternative, you can say, hey, agency of wonderful users, if you check the box and nothing pulls in, put 10, put 15, put 12, whatever you want to use as kind of a placeholder until you finish getting all your commission agreements in. Again, if you're just using an average, give everybody a number to put in there. So that's another option. Don't forget to turn on your commission premium calculation. Again, if you don't have any premium there, it's not going to calculate. And if you don't have any agency commission there, it's not going to calculate. So just keep that in mind. Don't forget to educate your users on what to complete. Remember when you require data fields and you don't fill them out? Maybe you changed something like the policy status or the premium payable entity and you forgot to fill out that blank. Boom, it just changed all of the things that you just put in because you forgot to fill in the required field. It is annoying. I've done it before. So make sure that your users understand the fields that need to be completed and understand that they are going to be required fields. And don't forget, if you've gone to all of the work today after you've learned all about how to enter commission agreements and you've got defaults in for your carriers, again, you can reach out to Applied. They can script it to check the box for you and pull those default commission agreements in. I have had a couple of agencies do that. Just makes it easier, gets things moving a little bit faster. And if you're using something like RPA or a bot or any type of AI automation, you may also, reach out to them to help you check those boxes as well. So all kinds of things that you could do. So of course, some of the ways that we can help are some of the ways that we introduced in the beginning of our session today. If there is anything that you are interested in, please feel free to drop us a note in the Q&A, and we will be sure to get back to you. Keep in mind, we are doing webinars all the time. So I already led on to our setting up producer and broker agreements. One thing to note, that is going to be a little bit longer webinar. So I won't go over, hopefully. I think that's why we extended it. Is that right? So no, it is a lot of information. So if you are going to attend that one, please keep in mind I think that one's about a 90-minute webinar for you. And don't forget, Jason Goebel is going to level up your AI game with techniques for clearer and smarter results. This guy's a genius. He's really smart, not gonna lie. So you're not gonna want to miss that one. All right, thank you guys so much for joining us today. Again, if you would like to learn more about Kite Tech's IT and consulting services, please feel free to reach out to us. We would be happy to meet with you and learn more about your agency's goals and explore how we can help. We really appreciate you again for attending today's webinar and hope you have a wonderful rest of your day. Bye.